Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today's Thursday, July 16, 2009. The yen gained against the euro for the first time in 4 sessions as there was a renewed sense of jitters in financial markets regarding the possible bankruptcy of CIT Group and a report showing a record number of U.S. foreclosures. Stocks were up in Europe, but following the rally in the euro-yen the last 3 sessions, the pair may have been due for a correction. The euro-dollar pair was able to rally above yesterday's peak, setting an intraday high near 1.4165. That came at the start of New York trading, as European stocks posted positive gains, U.S. weekly jobless claims came in better than expected, and JP Morgan Chase posted stronger than expected second quarter earnings. Still, U.S. stocks, after opening higher, were trading mixed in the New York morning, and a weaker U.S. manufacturing report pushed traders into risk-averse mode, which gave the greenback a chance to pair some of the euro's earlier gains from the first half of the New York session. Following a test of 1.41, a late rally in U.S. stocks gave the euro one more upswing. In the U.S., jobless claims fell by 47,000 in the week ending July 11th to 522,000, a figure that beat expectations and is the second straight week of sharp declines in jobless claims figures. The continuing total claims fell by a record 642,000 to 6.273 million, the lowest figure since April 11th. The Labor Department said that due to the 4th of July weekend and difficulty in anticipating seasonal automobile industry layoffs, that the data does not yet point to a turnaround in the prospects for hiring. Instead, the Labor Department said that within a week or two, the data should be more reflective of the true state of the labor market. In other U.S. fundamental news, international demand for long-term U.S. financial assets weakened in May. Total net sales of long-term equities, notes, and bonds were a net $19.8 billion compared to buying of $11.5 billion in April. A decline in demand from Russia, Japan, and Caribbean banking centers offset an increase in demand from China. A third report, the Philadelphia Fed Manufacturing Index, weakened to negative 7.5, a figure that was worse than expected. The report showed that new orders remained negative, though an improvement over last month. The shipments and employment sub-indexes, however, deteriorated. The dollar-yen pair, which was sliding overnight already, continued to fall in New York trading as a turnaround in risk appetite ended the pair's 3-session rally. The pair had started the session around the 94.45 area, broke a short-term line of support, and fell about 110 pips to the 93.25 area. The US dollar-Canadian dollar pair found support at yesterday's low near 1.1120 and rebounded to the 1.1225 level in today's trading as oil prices weakened, and as we mentioned before, financial markets were hit with renewed jitters over the CIT Group. Also, the loonie gave back some of its steep gains from its last 3 sessions. The correction was rather limited compared to the recent 540 pip down move. A pullback to the recent rallies and higher yielders and risk appetite was the theme today, as we have been demonstrating, and is evident here in the Aussie-US dollar pair. Following its test of 0.8050 yesterday, the pair slid overnight to the 23.6% Fibonacci retracement level near 0.7960. The Aussie found support there during the European session, rose to set an intraday high near yesterday's peak, and then fell back down to start the New York session. Finally, with U.S. stocks climbing in the New York afternoon, the Aussie rose back to test its previous highs. Tonight, Australia will release quarterly data on import prices, while overnight the Eurozone will post its trade balance data. Tomorrow, Canada will reveal its Consumer Price Index for June, and the U.S. will post a report on housing starts and building permits. And that's it for today's broadcast. Thank you for joining us here at CMSFX.com. Join us tomorrow as we wrap up the week. Thanks for watching and happy trading.